Okay, folks, welcome back. This is the daily log entry for February 9th, 2021. All right, so we have the euro dollar 5-minute chart. Okay, so we have midnight New York time. Prior to midnight, we have the buy side imbalance, sell side inefficiency. Now, the darker lines in here refer to your 60-minute chart, and you'll see that as a buy side imbalance, sell side inefficiency as well. Inside the 5-minute chart, you can see the smaller one that we dipped into. So we have institutional order flow entry drill there as well. After midnight, Judas swing down. Now, I outlined it. I'm bullish euro. I'm bearish dollar. Okay, it's not a plan A, plan B. I'm only interested in going long euro. Ideally, you want to be buying at or below the midnight opening price, which is this line here. It takes you right to this candle's opening. At or below it is the highest probability entry. You're trying to buy the low of the day, which typically forms in London Open. So we have market trading lower into an imbalance at an entry pattern I taught. The bias is what? Bullish. I'm not interested in selling short. There's nothing that I'm interested in going down. Okay, I'm not trying to catch a move like this. I'm interested in only buying below the opening price at midnight. That's what I'm teaching you. That's the purpose of keeping you on side with the commentaries, focusing on the higher time frame. Daily fair value gap here, you can see that was also mentioned in the weekend commentary that we'd likely draw up into that. And if we traded up through it and came back down into it, which is what we see here, it should accumulate again and trade higher. Now, when we look at London close, when we have a longer term higher time frame bias that's directionally driven, in this case, lower dollar, higher euro, the London close kill zone can create continuations that would otherwise not be expected, that would normally be seen in a New York session. We see it go a little bit lower at the beginning of London close, but then we have an optimal trade entry here, and it starts to rise. So it'll be interesting to see if we continue lower on dollar and higher on euro. That's what I'm favoring. 60-minute sell side imbalance, discount low, sell side imbalance, buy side inefficiency, premium high. These levels are seen on your hourly chart. Consequent encroachment trades back down into the daily fair value gap here. Consequent encroachment as well. Overshoots it a little bit, doesn't quite close it in. If it's bullish, we want to see these types of signatures where it doesn't completely close in that gap. Price runs up, finds some support again at the SIBI discount low. That's what's occurring here. It's accumulating there. Then rallies. Now, you'll see things like this, and I'll draw it out over here, and I'll say, see, this is resistance, broken, turn support. Listen, that is a farce. Okay, what you're seeing is the real logic as to why certain levels accumulate and where they see distribution. The manipulation starts at the educational level, because if they can indoctrinate you with these books where support and resistance supposedly exists, but yet everybody's in the 90% bracket in retail losing money. Now, I'm not saying that you can't make money in retail, because I did it. Okay, I got lucky, very, very lucky in the beginning, but I had no idea what I was doing back in the 90s. I had no idea when I first started, but I got lucky for months. That does not mean that retail logic works. It just means that I was on side in a market where it was predisposed to go higher anyway, and every single time it went oversold, I was trying to buy it. That's it. So if you understand what I'm trying to say here without being offended, the idea of understanding rebalance, imbalance, and liquidity That's the narrative of what makes IPTA work. Okay, what it's doing, where it's remembering certain price points. It's not looking at this. Okay, there's nothing here that IPTA is seeing. It's seeing the 60-minute imbalance levels. That's what you're seeing here, the accumulation there. It reaches just outside the scope of that discount low. And again, you're only going to appreciate these two red lines here if you see them on your hourly chart, which is what you're supposed to be doing here. I'm giving you the things to look for in your chart. If you don't have them in your chart, go into where I have the time frame where it's located at and put them on your chart, and you'll see that's the homework. That's the work. Even though I'm doing most of the markup for you, it's still an exercise of discipline on your part. You got to go in here and see what it is I'm trying to draw your attention to. But this accumulation is occurring based on the imbalance on that 60-minute chart, not just simply these equal highs. Because everybody can play armchair quarterback and say, oh yeah, this is what it is. And you see everybody on YouTube making videos like that, selling courses and stuff. It's ridiculous. You're seeing the logic behind what makes the market go higher or lower and where they're going to form new entry patterns. Over time, the exercise of doing this, and it's still so early in this for you that just started, but there's a lot of you, and I'm not going to answer all of your emails that have this theme in them, okay? So this is why I'm going to address it here. Listen carefully, because I'm not trying to make you mad. I'm not trying to push you off. I'm not trying to offend you. I'm not trying to say you're not important enough to respond to, because I'm responding to you right now in a blanket comment. Many of you that are new, that just came in on month one, are already abusing email. I have students that have literally sent me 37 emails. 37 emails. I understand you feel like you need to know everything as soon as you see it. That's normal. That's a realistic feeling, but it's not realistic to expect it. Okay? It's human to expect it, but I'm telling you, and I warned you in advance. I even said it in the beginning before you even enrolled, all of you. If you're someone that needs to be handheld every single step of the way, and you are not going to do anything with studying and going into your charts and deferring the necessity that you feel you have to have in having everything understood the first time, which is unbelievably impossible. You can't expect that. You can't, okay? There's so many things. Just in this chart alone, I could literally talk the entire remainder of 2021 just talking about these things right here and never touch on any other topic ever again in 2021. That's how deep this is. Think about it, folks. Listen. You learn how to ride the bike by getting on and pedaling once or twice and falling down. Period. That's uncomfortable. It's scary. That's you going into these charts and saying, okay, I see these annotations. It looks neat, but I don't know how I got it. So therefore, it takes effort, and I'm just going to be frustrated and let him tell me exactly what I want to know every time I email him. I told you all, I'm not going to be the ICT Magic 8 Ball. If I need to know something, I'm just going to shake the email box of ICT, and he'll tell me yes or no, or he'll validate my idea about this pair or this market. I'm not doing that, folks. I never promised I was going to do that. I said that 99% of the time when you email me while you're going through core content, which means you're making monthly payments, okay? Now, for the cynics in here, you're going to hear, oh, he just wants my money. He ain't going to answer any questions until I pay all the money. No, I'm telling you that you need to submit to the ideas that these things are going to be taught to you in later lessons when it's most salient. Right now, it's not. I got people asking me, hey, why aren't you talking about Trader's Trinity? We don't teach Trader's Trinity here. Why aren't you talking about the market maker buy and sell models? I see it in the chart, but you're not talking about it. It's not important at this stage of your development. If you see it, great. If you don't, that's perfect, because I want your attention to the things I'm showing you right here. Because if you haven't been paying attention, the market's doing what I'm telling you is going to do. You all came in here wanting to know what order blocks to buy and sell and how to find bias. That's what I'm teaching you here. This is the point of learning under me. This is mentorship. It's not those lessons that some of you are crowing about. Why am I looking at 2016 lessons. Aren't these outdated? No, they're not outdated. See, what you're upset about is you probably had a friend of a friend that gave you those lessons. And you think that there's something in addition to that that's 2021 that you need to springboard into when you don't even know what you've learned or been exposed to just by seeing the lessons in the 2016 content. Those are primary prerequisites. You have to know that stuff. You're never going to understand what I'm pointing to. You're never going to understand what I'm going to outline or why I'm even drawing your attention to anything unless you spend time in those lessons. That's why these people that sit around these chat rooms have no idea what the hell they're doing just because they have stolen or pirated copies of these videos. They have no idea what's going on. And some of you found your way into the mentorship legitimately, and you have that mindset. And you think just because you sent me your 155 that I'm obligated to send you an email response as soon as you send them out, all 17 to 18 times a day. Listen, I already know some of you in here are running your own little mentorships with my stuff. And they're getting questions sent to them, and they want to seem like they know what's going on. So they're going to run them through me. I don't do that, folks. Sorry, I don't do it. Now it's starting to make sense why, right? Exactly. And if that doesn't fit with you, don't pay month 2. Don't continue. Period. It's not Have It Your Way mentorship. It's ICT's mentorship. And the last time I checked, I'm ICT. You're either going to submit to this process or you're going to fail. Period. Now, there's going to be a change in the course of the commentaries. They are only going to be review in nature until I remove the 57 people I've already seen and people have reported. You're going to learn everything I promised, but I'm just not going to point to the next thing that's going to happen. I started this whole mentorship off in January. I said, listen, we're going to go a certain direction in the beginning. If I see it abused, I'm pulling it back. And it's not a signal service. I did not promise you this every single week. I promised that I was going to teach you how I do it. You've already came through the doors. You see I can do it. You see where I'm pointing to, and it goes there. I don't need to do it every single week in front of you. Period. I'm going to teach you how to get that skill set. If that doesn't fit with you, don't pay month 2. US dollar. Redelivered rebalance after the fact. Now, while this is happening in dollar, this is extremely bullish for foreign currency. The idea of focusing on bias, which side of the marketplace I should be trading on, which side should I be looking for setups. That's the most important thing, not trading which bullish order block, what do I do with the fair value gap, do I buy the middle, do I buy the low, do I buy the high? That's not important. This part of the mentorship is for me to teach you by repetition. You haven't even completed the first month. And many of you are already frustrated because you think you should have learned it by now. It's not going to happen that way. Some of you, it's going to click. You're going to see things, oh yeah, this really springboards my understanding because of what I'm seeing being taught here. Others have 1,000 new questions and you're panicking like you're not going to learn more things after February. You have to trust me, okay? You have to trust me or this isn't going to work. I know how to do this and I'm certainly willing to share it and teach you how to do it, but you have to learn it the way I'm teaching it. Don't listen to these other yahoos out there saying that, oh yeah, I'm going to teach it better. It's short, straight to the point. ICT talks too much. I'm talking to you right now, and I'm telling you the reason why those people aren't making traders. They're not. They can't trade profitably. They cannot do it. I've challenged every single one of them. They won't do it. They will not sit down and outline moves before it happens either, unless they heard me do it here. And that's another reason why I'm dialing it back. because there's a whole lot of IML guys. Yeah, how about that? I found out. Told you I was going to be in your groups. Told you I was going to be there. And I'm shutting you down. Everything that you learn here is a gift. Everything you learn in this stage here sets the pace for your growth going forward. If you mess up right now with ideas of feeling like you have to rush to learn something, you're going to mess up. You have to grow comfortable with uncertainty, because that part is always going to be there as a trader. And right now, many of you can't accept the uncertainty of whether you're going to be successful here or not. And it's just the first couple weeks of the first month. If you can't stand it, if it's intolerable for you, or if you're not seeing what you want to see, do not pay month 2. Am I being very clear? Because I have too many of you now, way too many of you. And I cannot hold the hand every single day with people emailing me saying, hey, I'm looking at this chart here. Could you explain this and this and this? No, I'm not going to do that. Okay. I mentioned this also in the description and when I was doing the outline about what it is you're going to learn here. There's no way I could sit down and email responses to everyone if they send me multiple emails every single day. If everybody here just sent me an email once a week, I would never get to it. That's where we're at, folks. Okay. I wish I could have somebody else in my staff to say, here, you answer these questions for me. None of these people here work for me, know how to trade. They don't know how to do it. It's just me. Which is why I said in the beginning, if you are not 100% in control of yourself, patient, please don't join, because I'm going to frustrate you, because I'm not going to be that little genie in a bottle that you rub the email box and I'm going to answer your questions like that. It's no way. Sometimes it will feel like that. I may be sitting in my room and eating time and just catching emails as they come in. If it looks like it's something easy and short I can address, I'll do it. But most of the time, I'm not doing it, because they're email questions about things that you're going to learn that you don't know about, that they're in future lessons, and you don't need to know those answers right now. It's terribly frustrating for me, okay, to see how much abuse is going on in here. And then on top of it, some of these folks that may be the ones doing it, and I may be wrong, but some of them I'm certain they are, they're the ones asking me the most questions already. And I have learned that the ones that are the most sweetest in their delivery of their emails, the ones that call me sir the most, they're the ones that put the knife in the deepest. Okay? And that's just the way it is. This is what it's become for me. And I don't want folks here that are going to take advantage of me. Okay? So I can teach this to you without laying everything that's going to happen in the future in front of you. I don't need to do that. I have proven I can do these things in advance, and I have also seen that it's not being respected. So this has never been part of the mentorship, me pointing out exactly what's going to happen in the future. On the midweek reviews and on the weekend commentaries, I'll talk about bias. I will absolutely not point to where it's going to go to, so that way you have a target or anything like that. I'm not going to do that. It's not necessary. In fact, the first 2 groups didn't have it. And I got people that are successful in those groups. They're telling me right now that you all are spoiled. And that's okay. I wanted to go in. It's a gesture on my part going into this year as my final mentorship, as my final victory lap. Okay. I was willing to pour myself out. And guess what? I got a thumb in the eye. Now, some of you in here are angry right now. Maybe you're angry at me. I understand. But I'm not going to stop teaching what it is that you paid to learn. I am not laying gold of future moves in anybody's hands going forward in this mentorship. That, and it's not going to happen no more. Do you need that? You might think you do. You don't. If you think you do and you're angry, don't go to month 2. Because I'm not going to entertain an email. You're not going to change my mind about it. And you'll see, just like I promised, it's going to take a lot of work. Even with me pointing things, it still takes work. So right now, if you're looking at the dollar index like it is right here, the market's heavy, meaning that it's likely to go under here. No guarantee. It's just likely to go down there. But look what has happened since me drawing your attention over here, real time, on my community tab on YouTube. I mentioned on the hourly chart on the dollar, you're seeing the very thing I taught you in the previous commentary. Redelivered, rebalance. Now, if you see this happening, and I initially drew your attention here, from here to here, what is the bias? Bearish for dollar. That means the opposite is expected on euro. The opposite expected in pound. The opposite is expected in Aussie dollar, on New Zealand dollar, so on. Every time it rebalances, big, large range down candles, like we do here. Okay, when it starts to run back up, we do not consider that a low. It's going to keep trading higher. We look for this and say, okay, this is likely to sell off once it gets to this price point. And as long as these signatures occur in price, order flow is bearish. Until when? Well, minimum this level right here. Because it could easily go below this candle here or touch it, and it can form an institutional order flow entry drill. That's the reason why you want to take a partial there. This imbalance, consequent encroachment. When this candle was trading up here, many people would have looked at that as, okay, maybe it's creating a low. Maybe it's going to start going up higher. What's the order flow? Bearish. It could still dip into consequent encroachment, which is the midpoint of this buy side imbalance, sell side inefficiency, close it entirely, and if it breaks below it, then we would consider this small little area here where it's relatively equal lows. Anything that's clean, like it doesn't take a trend line drawn below here to see that as too smooth. Okay, it's like an area where everybody's eye would go to if they wanted to put a stop loss in. Okay, it just my eyes jump to this area, and over time yours will too. That's a liquidity pool. Now, if we go below that, what's to the left of it? This old low. So below this old low, it's going to be sell side liquidity. So as the market's up here and it's trading down and goes through the lower level, this is the discount low of this buy side imbalance, sell side inefficiency. So the discount low is always the lower level, and the premium high is always the upper end of a range for fair value gap, BISI, SIBI, vice versa. If we trade through the discount low and we are in a bearish order flow, which is what we're seeing here, and then we retrace back up into the midpoint of the fair value gap that's seen with this imbalance. Now, when I'm saying buy side imbalance and fair value gap interchangeably, again, just know that the premise is imbalance. Okay, there's an imbalance. What kind of imbalance? It's buy side imbalance. Sell side inefficient. It's inefficient in the sense that there hasn't been any down movement between this candle's high and this candle's low. The way we apply technicals to it is it's a fair value gap, and we want to use consequent encroachment. Once we trade below it and come back in, the midpoint's going to be sensitive. It doesn't necessarily need to trade up here, but if you notice what the bodies of the candles are supporting, the idea that the midpoint of that gap, even though we have wicks going through it, that's always going to be the case across the brokers. If you look at Saxo FXCM, or whatever, broker's feed you have access to. If you look at these candles respectively, there's going to be a difference in their highs. It's because the broker, they have the luxury of opening and closing the spread on every candle within reason. Not a lot, but enough, and it's legal, and you agreed to it anyway. But when the market trades back up into this area, it's offering the opportunity for it to sell off again, initially right below this low, for offset distribution. Offset distribution is, in this case, when we're bearish, every time we take out a short-term low, that would be an area where you would take partials if you were holding a short. Now, we don't personally trade dollar index, but the logic is here that you would transfer to that of like euro dollar. And if this was the case of euro, at the same point here, euro should be taking out a short-term high, whereas the dollar is taking out a short-term low because it's a mirror image. So if that happens, we would be taking a partial below that. Usually that's what you see me prompting for those that just joined. You understand now when I was on Twitter or when I was posting on my community tab now, which is the only social media I use on my YouTube channel, if I say pay the trader, okay, or hashtag pay the trader. When I'm doing that, I'm prompting you to take a look at what price has done. And I'm drawing your attention to points like this, below old lows, to cover something. You need to get in the habit early on seeing these movements by themselves without taking any trades. And I got a few of the ladies in our group sent me emails very excitedly saying that they just did their first institutional order flow entry drill. One took their first bullish order block. It was very exciting for them, and it was very rewarding me reading that. And I'll give you a heads up in a short little reply, but I'm counseling the people that are here that these same individuals have worked hard before getting here too. Some of you that just came in on month one have never really seen anything structured around trading. You just seen something stupid on YouTube, okay, or some Yahoo on Instagram supposedly teaching stuff, and that's your only exposure. And then you're coming in here and you feel like, I need to know what I need to know, and I need to know in the order I want to learn it. And you have no idea what you're asking for. It's like, it's hard for me to articulate that, but that's the truth. And it sounds arrogant. It sounds like, this guy's full of himself. He's not a good teacher. No, there is no bad teacher, period. There is no bad teacher. A good student can learn from a limited teacher. I'm not limited, but many of you are coming in here with your minds closed. You have a rigid expectation of what you want to accept or receive in the teachings, and you're pushing out all the things I'm telling you that are most important. These ladies that reported that they found success today, right away in their first month, they're doing something that they've never been able to do because they have studied the free stuff for a long time. And then when he stepped in here, they had that little thing that clicked for them. Now, does that mean they're going to be profitable and all that? No, that's not what I'm saying. And I'm not trying to diminish their excitement or their milestone they reached today. But it's a testimony to the work that's required. And some of you want to say, well, I watch your videos. That's not work. That's Netflix binge watching. Okay, that's the same thing my wife does with the stupid things that she likes to watch on there. I have said this many times. You have to look at what I'm showing you in the video and then go into your own charts, mark them up. If you're looking at these charts when I show them here, and just let you know, we're not going to have the section of me going into TradingView today because I wanted to address a lot of things and I'm obviously animated. Okay, I'm a little pissed off, to be frank with you. So if we can defer that until Thursday's daily log entry, I'll add it there because I'll show you how you can set your charts up and save them. That makes it a little bit easier for you to organize them. I'm not going to have the time to do it today, but I got to get some of this off my chest because if I don't, I'm going to explode. So if you're looking at these logs, okay, I had one of those students reach out and say, I need an example of a good, I guess, paraphrasing it, a good log entry, an example of that. Well, this is what it is. This is what I'm doing every day with you all. I don't need to do this. This was not promised to you, but I'm doing it because I want you to see by repetition, if you submit to it, the first full month that you do it, that means you have 20 technical days of logging your observations. By doing that, you're going to have a baseline experience now. It may not be what you feel comfortable with in terms of, okay, I paid this much money to Michael and this is what I've been doing and I don't think I learned anything. Okay, do the same thing in month 2. And you're going to start seeing things that you didn't see in month 1. And you're going to understand more things in month 2 that you didn't even know was going to be taught to you because of the experience factor. You're not going to be able to see the things that I'm showing you because I could paint this thing up even bigger and better than what you see here. I'm only drawing out the most salient things that you need to know right now. That's all. That's all I'm doing. You want to know what direction the market's going to go? What's the bias? Okay, well, I gave it to you. Where's it going to go to, Michael? Well, I showed you. It's going to go here. Okay, so we have range between here to here. That means between this point here and while it's dropping until we get to this line right there, you have high probability conditions for a bearish dollar, which is high probability for higher euro dollar. No, I'm not going to outline trades for you in these daily log entries. I'm not going to do that. And I have members that are charter members that are asking for that. No, I'm not going to do it. I never said I was going to do that. I'm giving you exactly what you need. I am giving you everything that you need. If you can't see it, give it another month. If you don't feel like you're learning, then drop out. It's simple as that. Okay? There's no shame in that. If you can't cut it, if you can't go through the things that's required to be here to learn this, I'm promising you it's going to get more demanding on your end because you're going to have to be doing a whole lot. We're only working with just 2 pairs and the dollar index. And a lot of you are asking, hey, can you put in gold? Can you put in the S&P? Can you put in all the indices? Can you start talking about crypto? Listen, folks, look how much is involved already with just doing the markets I'm covering. You want me to tickle you with the markets that you're trading. So that way, if you hear me say something that you think is likely to happen, then I'm vetting your trades for you. I don't do that. If you can't find setups in the euro dollar and supporting it with the dollar index and the pound dollar, you're not interested in learning how to trade. You're interested in hunting the next setup or signal. And that is not what you should be doing. Not what you should be doing, period. I lost fortunes doing that. Most of you don't have a lot of money in your live accounts anyway. And if you lose it, it doesn't feel good, but it's easy for you to put that couple $100 back in there. I didn't do that. I had fortunes, lost. And you can't appreciate working with big accounts until you learn boring discipline skills in operating in this venue right here with no money, no enticement to lose or make. You're not feeling any stimuli from that. And in fact, you should be in a state of mind where you're not feeling any stimuli with the decisions being right or wrong as a result. That's the proper mindset right now. And some of you are exhibiting the inability to try to align yourself with that. And this is your wake-up call right here. It doesn't feel good for me to talk to you like this, but I'm telling you, this is exactly what you need to hear. I wished I would have received this from somebody when I was going through it, because I wasted a lot of time trying to do things what I felt was right, what I felt like I was going the opposite direction, when in fact I was on the right path. And I purposely took myself off the path, chasing other things, looking at other people's stuff. If you find somebody else that's out there doing better than what I'm showing you here, and they're putting you in trades and that tickles you, and you feel like you're doing something better there, go there. Don't let me hold you back. Don't even continue, okay? You have to ultimately be happy with what you're doing. And if I'm not giving you the evidence that you're going to learn exactly how to do this, but it isn't going to be realistic for you to expect it in your first couple weeks, then maybe you should consider going a different direction. Maybe I'm not that mentor for you, okay? And it's okay. There's been people that have left here, came back and said, hey, it didn't work out with me under you, but I'm doing something else and I made my own thing up and here's what I'm doing and I'm profitable. Praise God. That's awesome. That's awesome. I'm glad they didn't waste any more time and they found what was working for them. But I'm biased. I'm biased. I see things in the charts a little differently, and I like to think of myself a little bit better than the average bear. And I can communicate this to you, and I can pass on this information to you, but you have to roll your sleeves up and do it. And it's going to feel like, for the first couple months, that you have no idea what you're doing in these exercises, dressing your chart up and seeing what it is I'm pulling out. That's normal, and I've already stated this. But at the risk of sounding repetitive and making myself, speak on things that are redundant in some of your eyes, or ears in this case, it's important that you understand that this is exactly what you're going to be spending the rest of your life doing if you're going to be a trader. This is the stuff you will do every single day. And many of you are showing this disdain for it. Like, I don't want to do it. Because it's showing you something inside you that you need to be aware of right now. And what it's showing is you have no patience. Despite your email saying, I'm very patient. I'm not someone that's rushing. You are rushing. You are impatient because you're expecting to see something that you wouldn't otherwise expect to learn. Like Tiger Woods, hands you a golf club and says, okay, do what I do. And he hits a birdie. And just because you follow around on the golf course all afternoon, does that mean you knew how to do that too? No. But that same level of expectation, as unreasonable as it is being held by a great number of you. And you have to change that thought process. And I can't do that for you. You need to align it yourself. Or, I can't do it. I got to quit. And hey, don't waste your money. Don't waste your time. Don't continue. People come in on the first month and realize this is going to take a whole lot more effort than I thought. Right. That's what I promised. That's the expensive part. The uncomfortable, expensive portion is you going through this early stage because you're paying for something and you're not feeling good while you're doing it. It's like exercise when you join a gym. You're paying to go home sore and wake up even sore the next day. And you're thinking to yourself, why did I even do that? Well, it's for a better quality of life. And that's what you came here for. Let's be honest. You came here to get rich. You came here to learn how to make a lot of money. Well, before any of that can ever happen, you need to learn about you. And if you can't submit to these little things I'm putting you through initially, that should be highlighting a great deal of things inside you that you need to work out. Impatience. Why are you feeling impatient? You need to address those things. I can't fix them for you, but you need to get down to the root causes of why you feel impatient. It may be because you've wasted money other places and years trading other stuff and it hasn't been helpful to you. I know, I've been there. But you're seeing the proof of it here. So relax. You are in good hands. For some of you, you don't want to do the work. That's laziness. It doesn't feel good hearing it. Nobody's around you right now. It's just me talking. But you that feel this way know exactly what I'm saying. And as much as you want to turn the video off or say, I'm done, I'm not going any further with this guy, at some point, if you're going to learn how to trade, you will have to go under some process, some form of rigid, rule-based exercise routine where you just keep doing the same thing over and over and over again to learn where your weakest links are. You have to identify them now. It's important that you do it now because you don't want to sugarcoat them. You don't want to hide them. You don't want to push them to the back burner and say, well, I'll worry about that when I start trading with live funds. No, you don't want to do that. You do not want to do that. You want to look at these charts and say, you know what? This is like my pastime. A lot of people do crossword puzzles, word searches and things like that. I can't remember the little thing that people do with math now. Sudoku. I may be saying that wrong. I got to look it up now. It's going to drive me crazy. But these little things that people pass their time with, okay? And while I'm a fan of crossword puzzles and things of that nature, I grew into a love for analysis. I love reading these candlesticks. I love it. To me, it's the best thing in the world because what you're doing is you're trying to predict the future. You're trying to read people's minds because that's what you're doing. You're reading the minds of other people. And you're forecasting future price moves. So in a lot of ways, it's like you are a wizard, a quote unquote market wizard. And you're able to take things and construct the opportunity and frame it around these candlesticks that could potentially yield you a monetary reward. And if you do this over a period of time, repeating the same thing with money management, you can exponentially increase that small thing into a larger reward. And you can make that as large as you want it to be. But you can't do that at all unless you like looking at these charts, spending time with them, and understanding that you're not going to know every single candle's story. That's reasonable for you right now to not know that. You need to be aware of it, and you need to hear me tell you this repeatedly. It's normal for you not to know the story about the candle right now. That's what you're studying. You're studying what the candle that's painting right now, before it closes, what is it doing and why? You need to study that. That's how I did this. That's how I learned how to do this. No one sat down with me and told me, do what I'm teaching you to do. But this is how I did it. I forced myself in these charts and I said, I'm going to learn how these things live and breathe and move and gyrate, and why do they do this and why do they do that? Why won't they do this? And why is it working over here? These are all questions that I wrestled with, and I figured out a whole lot. And there's no way, it's impossible, it's simply not going to happen. It cannot happen. I don't care how much money anybody has. I cannot do it in a shorter time span than what I've already constructed this course to do, because you have to know a full calendar year. Everything is in a monetary system and a cycle that goes through 12 months. It's all seasonal impacts. You all need to understand the importance of these smaller time frames because they are going to be doing the same thing just in a micro level that you see on the macro level. And you see a lot of these examples in these lower time frames, which gives you more experience in a baseline that's incrementally increasing each month. So use this first month, as uncomfortable and as clumsy as you may feel while you're doing it. Just be reminded that it is normal for you to feel that. It's absolutely normal. You should not feel burdened by not knowing what you think you should know because it's unrealistic. It's unreasonable. But by doing this, 8 months into your mentorship, if you look at what you've been doing and how you've been, I guess, reaching into your charts on your own and trying to find things that you're looking for. Now, there's going to be times where in your charts, you're going to have a whole lot more detail than I'm showing. There's nothing wrong with that. Absolutely nothing wrong. Over time, you're going to start seeing the things I'm drawing your attention to. And that's how you know you're developing in the right way. But it doesn't happen your first month, okay? That does not happen. Now I'm going to say this and then we're going to continue and finish the video. How many of you realistically believed coming in that you would learn everything you needed to know in the first month? That's an uncomfortable question, isn't it? Some of you with realistic expectations were thinking nobody would expect that. But if you're honest with yourself, many of you that are emailing me, it's like you already know you're not going to month 2 and you're trying to get as many questions in before your last date, before you're removed from the mentorship. That's the sense of urgency it feels like some of you are using. You are not going to learn everything in the first year. You're not going to learn everything in the first 5 years. You're going to grow into a trader, but you start with these seeds. These are the right seeds. These are the things that you need to nurture in the beginning, because this is the thing that you do every single day of your life as a trader. You have to look at these charts. You have to be able to decipher what they're telling you. If you don't want to do this part, I'm telling you, and this is the bottom line, you will never, ever, not 1 ounce of any chance in the future ever going to be a profitable trader. Period. Now that might be rattling to you, but that's what I'm trying to do. I'm, as much as I can imagine right now, if you were all in front of me, I would be shaking you by your lapels and eyeball to eyeball with you and telling you right now, some of you are thinking backwards right now, and you need to stop that. You need to fix that mindset and say, okay, I signed up to learn. And that means if he says do this, then I'm going to do that. I don't know what it's going to yield. I don't know how long it's going to require me to keep doing that before I see anything. But he said do this, so I'm going to do that. Some of you don't want to do that. And you need to understand why you don't want to do that. Do some soul searching, because some of you came into this half-heartedly. Some of you came in here just with morbid curiosity, but you just want to try to get what you can get while you're here. And that's fine. But you're not going to understand. Just like these people all around the world in these pirated chat rooms that have core content lessons, and they're all lost. So I know you're listening to me. I'm waving to you, and you're still lost because you have not been taught. You're just watching videos. Just like watching people make things on the cooking channel, the Food Network. You can watch that all day long, but unless you take notes, how much of that ingredient did they use? How much time did it spend in the oven? How much of a degree on the oven was it set to? How much of a resting time after it comes out of the heat? What's the purpose of that? Why do that? Why are they mixing the dry ingredients first before they incorporate the wet ingredients? You see what I'm saying here? There's processes. These things matter, folks. It's not me just talking because I want to hear myself talk. Because frankly, I don't want to talk. Okay? I don't want to talk. I invited you into my home. I invited you into my life. And some of you don't deserve to be here. British pound versus US dollar 5-minute chart. Before I put the annotations up on this one, this pair has been really fickle. I've mentioned this multiple times. While still calling it higher, I would not touch it. So that way we understand here what I'm saying. I'm not trying to stand on a soapbox and say, see how smart I am. Okay. What am I teaching you here with this pair? Why is it still in the rotation and the commentaries? Because I want you to know what it's like when you have a market that you just simply like to trade. It's your pet. Okay. Euro and cable are my pets. These pairs are just good friends. I know them pretty good. I know their characteristics, their personalities, and it sounds a little odd for a new student hearing that, but most markets have their own unique little personalities. They have these little quirky things they like to react to or behave a certain way. And once you understand what they are, it feels like reading a book that you've read already. You just know what the character is going to do. You know what they're going to say. And even though you might know all those things, you still find pleasure in reading that book. And I'm a Stephen King fan, and I have lots of books like that, and one of them in particular is The Stand. This pair right now feels like a book that I've read many times, but I don't want to get hurt by it because I feel like there's a plot twist in this that will harm me, and I will be displeased with the outcome, which means in translation, if I trade this pair, I'm going to lose money. Okay. Now, because I know this is likely to occur, and even though I can see it's likely to go higher, I am not trying to trade it. Because of those things, I've elected to focus my primary attention on euro dollar. So what have I been teaching you without me saying so? Without literally sitting you down and saying, okay, Brian, all right, Mary, this is what I'm doing. Because if I sit down and tell you in advance every small little detail about the lesson, number one, you're going to be bored. Like most of you have already been wanting to turn this video off probably. Maybe some of you are angry and upset because of the tone I'm using. But I'm angry too, and I want you to know it. And while you may not be the individuals in here that have caused me to feel this way, you are all part of the community. And I said, I'm not going to sugarcoat anything. I want you to understand the delivery, why I'm saying what I'm saying, why I'm not saying the things I'm not saying. But when I'm talking about things like this pair, as ugly as it's been, you are learning how to avoid a market that would otherwise entice you to trade. Some of you in here are like really hung up with oil. Like you're really, really hardcore oil traders. And there's nothing wrong with being a specialist. But what happens when that market that you specialize in enters a period of increased risk? Okay. Or what happens when that market goes into a period of uncertainty that even though it is usually your source of primary income as a trader, what happens when it enters a period where you can't trust it? Do you just roll the dice because it's your favorite market? Or do you respect the signatures that it's showing you because you've learned not to touch that rattlesnake that's shaking its tail at you, because that's what this is doing to me? And look at the price action. Look at the price action of this pair and compare it to euro dollar. Euro dollar is cleaner, much more easier to read, much more trustworthy. It's not a rattlesnake. Easy. That's the distinction. I'm teaching you how to avoid dangerous markets, even if those markets are your favorite. How do you identify a market when not to trade it, Michael? Well, by doing these things. What I'm showing you. I'm outlining and contrasting the difference. One pair is easier to read than another. If it's clear in one pair and not so clear, or it looks like it just keeps punishing the short sellers, as I've mentioned, this pair doesn't want to drop. It just keeps going up. But every run higher is muddy. What do I mean by that? Well, before we put the annotations on, just look at how sloppy this thing goes up. Yes, there's a lot of pullbacks, but it's not like it goes up, creates the displacement, and then comes back, rebalances, and runs. Notice that? It's all of this choppiness, but still keeps pressing higher. Choppiness and then presses higher. Choppiness and presses higher. That's not a market I want to trade in. This is a market that just keeps punishing short sellers. Okay? If you're new and you have never traded with live funds, you can't appreciate this lesson. You can't appreciate the things I'm communicating. Those individuals that have traded with live funds in probably longer than 6 months, maybe up to a year, you've had hit or miss or consistently not profitable. You know what it feels like to be in a market after you've done it, and you knew before you took that trade that it doesn't feel right, but I just can't say no. Let me click in there and get in there. And then you lose. And that's the worst kind of losing in trading, when you knew you shouldn't have and then you still lost. I can take a loss if it's something I took a trade on, it feels like it was there, and I took a loss. Okay, great. Big deal. That's a transaction. I was wrong. I don't care. I'm not going to beat myself up about that one. But if I trade this pair and I get stopped out, that will be in my head for 6 to 8 weeks. I will never, ever, ever get over it because of my obsessive compulsive disorder. It's real. Like, I wrestle with this. I live with this stuff. And it has helped me identify periods like this. Go back and listen. I've been reluctant to do anything with this pair. I don't trust it. It's not that IPTA isn't working. It's not that they've changed the algorithm. You're going to encounter this with a market of your choice of trading with as a specialist. It's going to happen to you, which is why I'm teaching you with the same markets all the time. Because if I change and move it around, what I'm actually doing is I'm putting you in the best markets at the best time, and you'll never learn a lesson like this. And this is where you're going to blow your account. I'll say it again. If you don't learn how to operate in markets like this and learn when to say, I'm not going to touch it, I'm going to observe, even if you see it going where you think it's going to go, engaging it would lose money. You know this. As a trader that's been trading for a while with live funds, you can see this lesson and say, man, I really wish I would have learned to identify these things early on. And you can appreciate what I'm teaching you here. There is a wide chasm between you that have traded with live funds for a while and have tasted being unprofitable and falling victim to things like this than that of a new student coming in that's never traded with live funds. They can't see it. The new student doesn't appreciate what's being discussed here. But when they go to live trading, okay, and they encounter this environment where their favorite market or markets go into a period of uncertainty and just choppy mess, just sloppy trading, they're going to burn their account or go into large periods of drawdown. And every single time that I went into a tailspin and it was loss after loss after loss, it was trading in markets like this one right here. Now, do you want to go through the process of losing and blowing out account or accounts, get the scars, and sit around the round table of ICT and roll our sleeves up and say, yeah, that's a good scar, but look at mine. Remember the scene from the movie Jaws where they're at the table and they're all sitting there and they're talking about which one had the worst injury? That's kind of like what I think of all the time when I see my students. They'll see me talking about something like this and they'll say, well, I want to have a story like that. Well, what happens if it hurts you so bad you can't come back from it? Because that can happen. A lot of people in here will think to themselves, I'm going to be able to trade. And then when they have their first period of drawdown, it warps them. Like they can't deal with that. And as much as they want to trade, they will never get beyond that pain and they'll quit. And there's lots of people that have done that, not just in here, all around the world and in any discipline of trading. It takes so much fortitude to stick to a model even when you lose. It's hard. But how do you know when to avoid a market? How do you know when it's going to enter these periods of just uncertainty and sloppiness? Well, look at the last couple months. It's in my commentaries on cable. I'm drawing your attention to the things. What you're seeing here is a signature that I've been talking about for months with cable. Even though it's been going up, it's just really fickle. It doesn't want to do clean price runs. And when you look at other pairs, wow, it's like night and day different. And that's why I'm saying spend your time looking at euro, and you'll see a lot better, cleaner price delivery, and you won't fall victim, hopefully, if you learn and have been learning what I'm teaching you here. You won't force yourself to trade the other market like this one, but you can use it to trade the crosses. For instance, euro pound. Okay, euro pound. If you study what these two pairs, the euro dollar and pound dollar, have been doing over the last couple weeks, and then compare that with euro pound. Euro pound had a real nice dive lower. It's all based on what you see in this cable market. Cable has caused that. Okay, so lots of manipulation. Lots of manipulation in cable, so therefore the price delivery is cleaner and more trustworthy in euro dollar. That, my friends, is worth just the first month's payment. You can't appreciate that lesson, but I promise you, in your journal, go back and watch this video right before you start live trading. If you ever get to the point when you try to trade with live funds and you feel ready for it, before you do, go back to this video, okay? And you're going to hear me talking about things. Once you trade a market and you encounter this, everything I just have been saying about it, and for weeks and months about cable, it's going to resonate more with you, because you will now perfectly understand what I'm saying. Whereas right now, without the experience of doing it and losing money and that feeling of, why isn't this working? And getting mad and going back in to do it again, that's the perfect storm. It's revenge trading. It's uncertainty and not, admitting that this is a market that you shouldn't be touching right now. So the rattlesnake has been shaking its tail at you, and you're telling yourself, well, this thing needs to be pet. Let me just pet it. It'll calm down. And when you reach over there and you try to pet it, what's it do? It bites you. It's telling you, I'm going to bite you. Are you surprised when it bites you? Some of you are, and some of you will be. And you'll think, well, I didn't pet it the right way. Let me go pet it again. And what's going to happen? You're going to get bit again. How many times are you going to need to do this before you realize that this is a rattlesnake, that it doesn't want to be pet and not going to be beneficial for me to keep trying to do this thing? The outcome is I'm getting tore up. But it's just a weird thing. When you start trading with live funds, you're not going to see it like this. It's going to feel like, oh, I was wrong on my last trade. I know what I'm doing now. Let me do this. And you get caught up in that and you blow out your account. Versus saying, okay, I'm human. I'm wrong. Let me take a step back and observe what's going on. Oh, yeah, this pair's not performing as I thought it would. And even though I have had a loss or two, or maybe a series of losses in it, I know now not to touch it, take a step back, and look for opportunities elsewhere. That's not weakness. That is not retreat and submission and tapping out and saying you suck as a trader. It means that you are observing real clues that there is no opportunity there. So if it's not there, it's elsewhere. Huge paradigm shift. But you can't appreciate that until you start trading with live funds. So I just answered about 30 different questions about cable. All right, so here is the long and open kill zone. Again, we're primarily bullish because we are weaker dollar based in terms of the symmetry between the market pairs. Lower dollar, higher euro, higher cable. So we're not interested in anything that goes up. We don't want to see or chase anything going higher in London session. We are more interested in seeing a decline. Now, I don't have it on the chart, and I apologize for that, but this is the opening price here on this candle. That should be extended out in time. So anything below that is an ideal area to be a buyer. Now, I don't want to touch this pair, and I've been saying it for months now. I'm not trying to hang my hat on anything. I'm right about this, I'm right about that. I'm telling you, even though we've called it higher, I would have not taken any trades here. And hopefully you can see, even if you're new, do you see how sloppy this is? It's back and forth. It's not really trying to go anywhere, at least not in a hurry. We did trade down into the buy side imbalance, sell side inefficiency here in London. So we create a low that gets slightly violated ahead of New York. Now, is that a signature that you'd like to see in a market that you want to trade? Well, as a student here, you're going to realize that's no, you don't want to see that. Now, are there times when you can use the 6 o'clock in the morning for early entries? Yes. If this market wasn't performing like this, if it traded below here and it traded down into the butt end of this buy side imbalance, sell side inefficiency, yeah, I would be buying that even ahead of 7 o'clock in the morning. Well, why would you want to do that? I'll teach that later in the core content lessons. Okay. Just know that there's reasons for me doing certain things, that I give you these rules and these ideas in future lessons. But hopefully you can see that there is a difference between this type of price action than that of what Euro was doing. Euro was a little bit more cleaner. It was more pronounced when it had its run higher, creating imbalances. Whereas this is this, who wants to go higher? Who wants to go back lower? It's just, it's indecisive. It spends the majority of the day in consolidation. So again, that is a market that is under heavy manipulation. So you don't want to trade in pairs that are doing these types of signatures where it's not trying to get somewhere cleanly and quickly. You want to look at its crosses, okay, like Euro pound or pound yen, something like that. Now, I haven't looked at pound yen to even know what it's done, but since it's traded like this, you can reasonably expect that there's going to be some displacement in the crosses with pound, not with the dollar. Okay, so dollar pound dynamic here is consolidation. But if it's paired up with another pair that's moving more liquid, higher or lower, you're going to have that in a cross with pound in the name of it. Like I said, pound yen would be an example. So it gives you clues that if you see these types of events, that means you should be looking for a trade in a cross. Okay, that means not coupled with the dollar, something that has the pound in its name. And the first example, again, pound yen. But it does trade higher. We do have the New York session really flat. Doesn't really give us a whole lot in here. And then a little short-term high in London close. Trades back down. Creates a short-term swing low here. And then starts to rally higher. Nothing in this day. Nothing, folks. Nothing in this day is high probability. You probably have a lot of annotations in here, maybe fair value gaps, maybe order blocks and all that stuff. The fact that we are doing this choppy sideways stuff, okay, that is the first indication that this pair should not be touched. So while it's beneficial for you to go in and have all your annotations inside this entire day, do it for your experience. But study how much sensitivity there is at the things you're drawing on your chart. There isn't a lot of rush or surge away from the levels that would supposedly create a buy or sell. It's just back and forth in this tiny little range. This is like 20 pips. I mean, it's not even a lot of movement. So again, what's occurring? Manipulation. It's being held. So if this pair is being held, not allowed to trade a whole lot in range up or down, that means that the Central Bank of England is holding this currency while still going higher. It's holding it up. Why am I saying that? It's failing to go lower. It will not go lower. And it just keeps sneaking up higher and higher and higher and higher and higher. And I don't trust this pair. So I gave you a whole lot of jawboning just on this pair, and it, for a new student, sounds like a whole lot of nothing. And that's why I told you to write this video down and record it in your journal, that right before you go into live trading, watch this video, because you're going to encounter this with live fund trading. It's going to happen. It's going to happen. I don't know how long it's going to be until you see this happen in your trading, but it's going to happen. And if you don't recognize it right now while you're learning, where there's no pain or suffering if you're wrong or right, if you had a decision that you thought you would expect to see unfold on the charts, and if it doesn't happen, you don't have any pain in that. You don't have any excitement in it. You don't have any loss, and you don't have anything to gain from it except for the experience of reading the candlestick. What is the market trying to tell you? Is it going higher? Is it going lower? What is it likely to do next? That's what your mindset is right now. It's early in the game. You need to learn that, where you're not worrying about whether you're going to be right or wrong. And if you have this learned properly in the beginning, you're going to carry that characteristic of an analyst into the next stage of your development, which is the second half of the mentorship. There's things in that second half, I guess technically it's month 5, but month 5 and on, you have a whole lot of things that you have to be aware of and work within in terms of rigid rules. Do this only then. Don't do this unless that. And if you have this indifference of the outcome, whether it be profitable or unprofitable, right or wrong, it doesn't sway your ability to see the next setup, then you have developed properly. The way you develop properly is to do the things I'm telling you to do in these daily log entries. This is what it's like every single day. And there's going to be days where you're not going to be able to find some things in the chart. Maybe some of you are shaking your head like, now I don't feel like I'm losing my mind because there really isn't a whole lot going on here. There is, but it's not clean. This little area here, this low and this high, you're probably asking yourself, why is that there? All I'm doing is showing you the range between this low and this high. Yes, it creates optimal trade entry, but it's happening ahead of the New York session. If this would have happened in New York and still ran this low out in London, that would be something I would expect. That's in one of the profiles, but this is not one of the profiles. This is just consolidation, and that's it. So, a little bit of a woodshed moment today for some of you, or many of you probably, in the first month. You probably wasn't expecting a conversation like we had today. I was going to do this video earlier in the day, but I was still a little animated. Like I mentioned before, there's always going to be people here, like anything else, that want to try to make a dime on somebody else's work. I understand that, okay? Is it right? No. Am I going to stop everybody that does it as soon as I discover it's happening? No, but I'm on it. And you will be caught. And there ain't no way you're getting back in now. I have a lot of people sending me the videos now. Some of these people are selling on Instagram. And I have people working with me buying the videos from them. And when I get the videos, I see what our market is, and I put them in a new group, and I whittle that group down, and eventually they're gone. But you're really, really, really running the risk of losing your seat here before I get to the best of the stuff that I was going to ever teach. So, there's always a few rotten apples in here. It's every year we've had them, and because everyone knows this is my last one, I would expect people to try to do it like after I say I'm done teaching the all the lessons, and then we just act as a community together in the forum. I would expect a mad rush to try to sell it then. It would make sense then because there's I have everything. But why these people in here would run the risk of losing their seat here? Like it doesn't make any sense to me. Like I understand desperation, I understand it, but man alive, like it's nuts. Like that's really gambler's mentality. Like that is really hardcore. I'm starving, I need to eat. That's nuts. But whatever. So tomorrow we will do our midweek review, and I will have another price action lesson in that one as well. Like I said, this week we have a lot of teachings. This one here is probably not going to be one of your favorite videos. It's not going to be those ones that you leave thinking, wow, I feel really good, I watched that one. In fact, you're probably feeling a little uncomfortable or maybe embittered by what I said and how I said it here. But I'm being real. I am not some algorithm without emotions. I am a human being, and I don't like being taken advantage of, especially when I'm being as generous as I am. And I knew that the likelihood of having this mentorship, there would be people that would do things like this. And I felt that over time, people would be like, you know what? This is stupid. Like, why am I even sharing this with anybody else? They don't deserve it. And who cares if they pay for it? Like, what happens with this content and the guy that's giving it out when he sees that it's being just mistreated and prostituted? I hold back. That's what I do. I'm going to tell you what this has all done as a result. I had plans to make a trilogy of books, and I was going to write them and release them. And one of them was slated to be put in production for release on the public in December of last year. And I postponed it because I just wanted to see what our response would be for this last group. And it was enormous. Like, this is a big group. Like, we really went way over my expectations. And I'm already turned off to the idea. So while that book isn't necessarily part of the mentorship, or those books, I should say, I'm just not going to do it, because I know just as soon as I do it, the PDFs will be all over the place, like my core content PDFs have been for years. And I don't care that those lessons are out there, because, like I said, those core content lessons, they're eventually going to my YouTube channel, just to make sure that people, at the end of me teaching those core content lessons that you get every single month here for the 12 months, they are absolutely not mentorship. They're just the language for you to understand what I'm talking about here. Everything you're learning is in these commentaries. Just like every video below the core content lessons each month that nobody wants to go through because they think they're old or stale or they're not useful. That's where I'm teaching. The lazy folks came in here and said, I'm going to share or sell those 8 lessons at the top of each one of those months. They're in all kinds of chat rooms and telegrams and Discord rooms and IMLs, pushing them out as means of staying in their little groups and making out my payout for suing IML even richer, because I have all kinds of evidence that's going on, and they're allowing it. Hello. Those lessons are equivalent to the primer course that I have on my YouTube channel. It's just introductions. That's why these people in these Telegram rooms, Discord rooms, all this, collecting of ICT stuff, and they're all still scratching their heads. You have 1 or 2 people in these rooms that think they know what they're doing, and they never are taking the initiative to do something before it happens. They'll always show you something that's already happened, because they don't know what they're doing. They're all floundering. They have no idea. And they're listening to me talking about them right now with pirated copies. And I'm talking to them right now. That's why you're struggling, because you didn't do it the right way. And some of you walk around here on the internet saying, oh, God bless you for giving me this stolen property of ICT. God's going to bless you for doing that. God bless you. You're cursed. You ever ask yourself why you aren't doing well? Because that's how I got this. You think that karma is going to unfold in your favor because you paid $10 for something that you're never going to be allowed to be profitable with? I know some of the atheists in here are rolling their eyes right now. Whatever. This ain't church, and I'm not trying to convert you. I'm just telling you the facts. This takes a lot of work. And if it meant so little to you that you thought $10 was going to get you there because you bought it off of some guy on Instagram, or Telegram, because $10 in their currency allows them to eat for a day. You're never going to make it. I've not seen not one Telegram room, not one Discord room, not one Facebook group to have my content in circulation pumping out profitable traders. It ain't happening. That's why they didn't step out when I said, here it is in February. All you guys out there that are doing that, come out here and trade with live funds with me. If you know how to do it and you're trying to teach it, then you have no problem doing it. And not one of them will step out there. Just like that kid Sean Lee from AstroFX. Fraud. These people are fake, okay? They're fake. All of them are fake. And I have always conducted myself here sincerely with every intention of making you successful, profitable. That's my goal. I want you profitable. Not just feeling good that you made an investment. I want you profitable. That means sitting down at any market that you want. You want to start trading stocks? You'll learn that here. You want to learn how to trade the bond market? You'll learn that here. You want a currency trader, futures trader, index trader, anything, whatever your heart's desire, I will put you in a position that you can take money out of that market. I can do that. I know what these markets are going to do when they're going to do it. Period. I have watchdogs in here watching me. Okay? They have been waiting and waiting and waiting because people were putting cases against me. Fraud, 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 fraud. Where's the fraud? They're in here watching me, and the things are happening just like I'm telling you they're going to happen. And I have fun over there on my YouTube channel because I'm putting out those calls publicly because they're all choking on it. I've been here all these years telling you these things. And it makes me sick to see just a total lack of respect for what it took. Like, you have no idea. And I don't care if you lost your job. I don't care if you blew out accounts and you can't trade. It does not entitle you to prostitute my life's work. It doesn't. That's the best that you're ever going to arrive at. Whatever you can get other people to pay you for things that you don't even know how to use yourself. And some of you are laughing in here. That's why you came here. You have no intention to learn how to trade it. You just know there's a big demand for it. I get it. But you're always going to be a nickel and dime guy. That's all you're going to be. That's sad. Like, who lives like that? Like, who lives like that? I don't know. I guess it's different when you have something that you worked for and it's blessed and you see the fruits of it and you had nothing from the beginning. So you have a different perspective on it all. But when you're here, you're going to learn more than just about the markets. You're going to learn how to conduct yourself and weigh risk and eventually how to manage money. For some of you, that won't ever be an issue because you simply won't be profitable because you have a different motive for being here. But I'm not going to be doing this forever. And that's why I'm trying to wind down. When I turn 50, like, I don't want to be doing this. I don't want to do it. Like, I'm completely turned off. Like, I don't want to do it. I have an obligation. I'm going to do it. You're going to learn everything that I set out to teach you. Will you be profitable? That remains to be seen because of how much you put into it. Will you be able to read the market before it happens? Absolutely. But knowing that's not the same thing as being profitable, which is why I explain in the enrollment agreement, when you sign that, we talk about things from a hypothetical standpoint. Yes, we're going to say the market's going to go higher. Yes, we can see specific things that would lead to a buy or sell signal. Are we executing on that idea in a live account? No. So therefore, there's no risk. There's no investment advice there. So I'm shielded legally because of that. But there's going to be a day where you can start seeing these things happen before they happen in the chart. Like, you're going to see them unfolding. Before it happens, you will know what it looks like. And then you're going to see it enough times every week that you're going to say, I've been doing this for 6 months and it continuously happens. Once in a while I'm wrong, and even though I'm wrong, maybe 1 or 2 times, maybe 3 times, it goes right back into working again. I can operate in that. And then you're going to make a decision. You will. And you'll put money into an account. And then it'll change. Nothing has changed per se, but your expectations will change. You're going to be sensitive to risk now. You're going to be sensitive to being right or wrong, because now the score matters. And the way you prepare for that is by desensitizing yourself in these first 6 months. Not worrying about money, not worrying about right or wrong, understanding you, because you're the person that's going to mess it up and derail you in the second half of the mentorship. And you will never develop as a charter member if you don't get control of yourself in the first 6 months. It's hard for me as a mentor to communicate that to everyone. It doesn't communicate well, because it's not a lesson, it's not a topic that nobody invites willingly. What you're saying is I'm flawed. I'm the problem. Yes, I was my own problem. For 6 years, I was my own problem. And I went around and around and around doing the stupid things that were wrong. Feeling that, I didn't do it the right way enough times. No, I was doing the wrong things over and over and over again. And not learning from the lessons that it was teaching me. But I was too stubborn to observe and say, okay, well, I need to stop doing this because it's not giving me the result I was looking for. And I focused on those things. So that way, if I knew what was the catalyst for those decisions that were made incorrectly, if I understood what was the driver behind them, I could get to the root causes of that and eliminate it. Because if you can take everything that led to a losing trade out, you stand a far better chance of being profitable over a long period of time. Now, obviously that's obvious, right? I mean, everybody can understand that. But you can't appreciate that until you blow out several accounts and feel what it just does to you emotionally and psychologically. It completely decimates a man. Ladies, not so much, but men, you might as well just cut our manhood off. Especially if they showed their friends and their family what they made on their first couple trades that were profitable and how they were going to quit their job. Because I did that. And I was shamed when I had to go get a job again. That sucked. That was eating crow. And man, they did not lose any opportunity to rub it in my face because I was arrogant. And I deserved it. I deserved everything that everybody ever said to me back then because I was pompous and arrogant. I flashed money around. I said everything I could to make anybody else feel less than me because I finally had that weapon of feeling significant, because I was never feeling significant prior to that. Having money made me feel significant. Whereas now I have lots of money and that does not make me significant. It doesn't do anything except for allow me to pay for things easier. I've learned that the greatest lessons was blessed to receive in all of this was through the pain. The pain of all this stuff is what you're being spared. Most of you would have never endured 1/10 of it. That's why I was given OCD. Otherwise, I never would have made it through it. I would have given up. But success was like that little piece of steak in between your teeth. Your tongue keeps going back to it. For some of you, you're going to find everything that you've ever imagined and more as a result of doing the things in here that don't feel right. They don't feel comfortable. They don't feel fun. Over time, a couple months in, this will become like therapy. It'll feel like, this is what I do. I like going in, I look at these charts and I mark them up. This is what I see in the charts. And then over time, your marking hindsight will become, I think this is going to reach for that. And it does. And then over time, you'll start thinking, okay, well, I will see that this chart looks like this other time where I thought something was going to happen, and then it does. And it happens by layered experience. Here, there, a little bit over here, and all of a sudden, you have this experience when you look back. And that's why you have to have a baseline experience level. Month 1 is your baseline. It's always going to be clumsy. It's always going to be, full of uncertainty and cloudiness and doubt. Doubt right now should be at the highest level. Even though you see me calling things and unfolding, the doubt is you, and are you going to be able to do this? Because you see me pointing things out in the charts and it just doesn't make any sense. Like, why is he doing that? I understand that. And those questions that you're thinking about, that's what you're supposed to be writing in your study journal. Write the date that you had that question. What caused that question? What was the birth of that question? What video were you watching at what minute marker? This is the level of interest that you need to have here. It's not me saying, okay, I'm going to be the drill sergeant. I'm going to put you through all this stupid busy work and allow myself to be able to kick the can down and collect your money. That's what all the people that quit thought. And many people that quit my first year, they came back in 2019. And they honestly have said, it was foolish for me to come in here like I did, and I'm so thankful that I went through it the right way. And they're doing great now. What took place? They changed their way of thinking. I didn't change the way I was doing anything. They just changed the way they thought. So they are the problem. Just like I was my own problem the first several years of my trading. I was the problem. I was that impediment to success. I was the one holding me back. I was the one that wouldn't learn. I was the one that wanted things my way. And when you don't know what you're supposed to have and you want it your way, you're driving drunk. I've never been drunk before, but it's, from what I gather, it's equivalent. You think you can drive safely. You can't. You're going to mess it up. You're going to crash. And just like a drunk, it's somebody else's fault, not theirs. The first 6 months is building responsibility here. Responsible for your own actions, responsible for your own thoughts, responsible for your own development. I'm not giving different lessons to everyone. You're getting the same lessons. Why is it that there are some people that are succeeding and others aren't? It's not because you're stupid. It's not because they're a genius. They're submitting to the process and they're all in. They're doing the things that they're supposed to be doing, and they're avoiding the things that they're supposed to be avoiding. They're not in social media. They're not in these chat rooms. They're not giving their attention to things that's going to steal all of the time that would be made better suited for development. They're not binge watching Netflix. They're not worried about the sports. Nothing. Just this. You signed on for a year. That means you have 1 year with me. doing what you see me doing. I'm not going to do these markups, every day of the year now. I'm not going to do it. I'm going to do it till June. Oh, you're not doing what you said you were going to do. Right. So now I've put a fire under your tail end, haven't I? So if you haven't been doing it, you better start doing it now. Otherwise, you're not going to get the experience that it's going to give you. And you're not going to appreciate by me verbalizing what's the benefit of doing it until you see it in your own development. And contrasting in your own study journal, when you save your charts, your daily, your 1 hour, and your 15 and 5 minute charts, they're the things that you're supposed to be having in your journal. You're welcome to take mine and screen capture them and put them in there with yours, so that way you can compare and contrast over time. But what you're going to be doing is studying what you were doing by comparison from month 1 to month 2. And then what you start doing in month 3 versus month 1 and month 2. And you will be able to see the development. You'll see it. You'll see things more in your charts that you didn't see in the first month. And that's how you measure progress. Because in the first couple months, it doesn't feel like you're learning anything. But you are. But you're just looking at, I'm not trading with live funds. If I would have joined that FX group over there on Facebook, I would have been trading live funds right now. And they're taking down 20 pips here and 80 pips and 900 pips with a 2 pip stop loss. Yeah. You get there gradually. You get there at a realistic pace. And you get there with hard work and boring routines and drills. I'm not hiding it from you, folks. I'm not making you do something that's not necessary. It's conditioning. This is what you do the rest of your life if you want to be a trader. You mark up your charts. You look for things that you recognize. You cannot recognize anything until you do pattern recognition. That's what I'm doing. I'm showing you the rhyme and reason each day, how I see it. And by experience of doing it every single day, compare and contrast, you will have experience gained from doing it. And it frames your perspective. And because you see these things unfolding over a period of time, you'll see also as a default how certain setups are much easier to spot than other days in the week. And you're going to start seeing the relationship of that calendar that we cover when we do our midweek and weekend analysis. When that's incorporated, you'll also see how that's beneficial too. Because until you start seeing it over a time of, compare and contrast with your baseline experience when you first come in on month 1, there's no way for me to, again, articulate it where it makes any sense, especially if you're not thinking with the right mindset. There's no way of measuring your progress unless you have a baseline evaluation of what it is you're coming in the door with. What's your understanding? And the way you measure that is by your annotations in your charts. That's it. You learn organization. You learn the pattern recognition. You knew the kill zones coming in here. There's certain times of the day that I expect certain things. But you also learn by default when the kill zones aren't that influential. And what does that mean? Because there's a lesson in that. Not for this video, but there's a lesson in it. And you'll learn that the best days occur around the economic calendar with the kill zones, with the bias, and the market structure. Sounds easy. That's what everybody says on YouTube. They all use the buzzwords, but they cannot find it before it happens. That's what this part teaches you. This part teaches that. But you can't learn it from just watching my videos. You can't just go like these people in these Telegram chat rooms. Hey, can anybody tell me where ICT talks about the body or the candles wicks? When do I buy it on order block? They're never going to learn. They're never going to learn. The secret is this. You do these things, then you are teachable. Then you're ready. Because I am an excellent teacher for someone that has the basic understanding of seeing pattern recognition. But until you get to that level, I'm not going to be able to communicate to you in a way that makes sense to you. Like, you'll hear me say a lot, and that's why you see these people all the time say, oh, he talks too much, because there's a barrier there. They can't comprehend what I'm saying. That language disconnect. That's what you need to be doing with each month's core content lessons. It teaches you my language. The way I talk to you through these charts, that's taught to you in core content. If you don't go through every single one of those lessons, if you don't do that, you will not learn here. Period. There's no way around it. That's the way it is. So that's enough for one day, I think. I will touch base with you tomorrow in our midweek review, and I'll see if I can come up with this YouTube video I promised y'all to. Until I talk to you tomorrow, be safe.